Do you feel as though you're currently drowning because of mortgage payments you are unable to make? Is mortgage foreclosure looming at your doorstep? Even if you're not currently in default, do you feel as though it is likely that you will default on your mortgage payments soon? If so, you are encouraged to look into obtaining either a mortgage refinance or mortgage modification as quickly as possible. What does the term mortgage refinance actually mean? In reality, this is simply a reference to the process of obtaining a new mortgage with which the borrower is likely to be able to pay off an existing mortgage. Of course, the principal purpose of obtaining this new mortgage is to enable borrowers to improve their credit and retire existing mortgage obligations. The rational thing to do in obtaining a mortgage modification is to do so when market conditions enable the borrower to obtain a new mortgage at an interest rate that is lower than the existing mortgage. When this mortgage refinance is obtained, the individual obtaining this financing accomplishes, among other things, the following. 1. Monthly payments are decreased to a level that is more manageable. 2. Retire the mortgage on the home much more rapidly. And 3. Enable the borrower to tap into their home adequately, increasing their monthly cash flow. Numerous individuals are walking around today with bad credit. Very often, these individuals miss out on an opportunity to obtain a mortgage refinance for fear that they will be unable to qualify due to the bad credit. If only these individuals understood the reality of the situation, they would understand that bad credit could be restored in a relatively short period of time if they were to obtain mortgage modification. Frequently, this topic is grossly misunderstood. Individuals must realize the value of following a structured plan via a mortgage modification system tailored to meet the individual's needs. Is a mortgage foreclosure breathing down your neck? If that is the case, you like most individuals, who are likely to feel as though you have nowhere to run. Never forget, the financial institution from which you obtained your home mortgage would do a great deal to assist you to avoid foreclosure. Remember, if you're unable to pay on that mortgage, they're going to be losing money. Naturally, these financial institutions would much prefer to have borrowers who are able to satisfy the mortgages advanced. If you're able to make your monthly payments secondary to obtaining either a mortgage refinance or mortgage modification, the financial institution is going to obtain the monies advanced. Furthermore, the borrower is able to avoid the negative consequences of a devastatingly poor credit score. Keep in mind, mortgage refinance is nothing more than that scenario in which the borrower obtains one loan in an effort to satisfy the previous loan. In almost all instances, this is preferable to a foreclosure. In addition to avoiding foreclosure, the borrower is very likely to obtain the mortgage refinance at a much lower interest rate than that obtained on the first mortgage. Therefore, the individual's monthly payments are lower, creating a situation in which payments are much more manageable. This creates a situation in which the borrower is much less likely to default on the loan. Are you able to renegotiate your current mortgage? In almost all instances, the answer is yes. Even in situations in which individuals currently have adjustable rate mortgages, those individuals are often able to obtain mortgage modifications. These mortgage modifications often enable them to make smaller monthly payments on that mortgage. When this occurs, obviously the individual has a much better monthly cash flow. Additionally, there are numerous tax advantages resulting from this strategy.